Hey ladies and gents, today I'm going to just film from my iPhone. I'm going to do no cuts, no edits, just a one take video. Just going over some price action. So I want to do more unfiltered videos, raw, candid, and just, I don't have to go to my studio and set everything up. I can just do it from my living room and get cracking. So I want to go over a case study of the days of price action. And one thing that I have to mention is I've been trading for a long time. I've been trading for 7 years, full time for five. Or no, actually no. Let me get that right. So basically, I was a university student, and like most of you, I was looking for things to do. I tried everything. I was studying dentistry, so I had my dental degree, and that's a very intense dental degree, where I had like 30 exams a year. Every couple of months, I had a new module, and then my exam seasons, which were every 2 months, I had like 10 or 7 exams in each module. So I'd have a surgery exam, a perio, an ortho exam, a peds exam. There were so many exam types, and then I'd have clinical work, and then I'd have deadlines, case studies, presentations, group projects. So it was hectic, and I was doing that degree for 6 years and graduated in 2021. So since 2021, I've been full time, let's say, where I'm doing nothing else. But even in my degree, I didn't have another source of income. I didn't have another job, let's say. I just had my degree and trading. So the interesting thing that for me was that my goal was, everyone at uni was just focus on the uni, focus on exams, focus on passing. And for me, my objective was, look, 6 years in isolation is a huge opportunity, which most people don't realize. For me, it was, if I just spend 6 years and all I do is get my degree at the end of it, I've wasted my time. And the reason for that is because I have complete freedom. I have time restrictions, yes, I have clinics and exams and all that pressure and stress, and it's hard work, a lot of studying and all of that. But I had freedom of, I had most of my day free after lectures. I just had to manage my time in exam periods and deadlines. But more or less, I was free time-wise. I didn't have any financial responsibilities. Rent was covered, fees were covered, everything was covered. My day-to-day expenses were covered. So I didn't have any kids to pay for. I didn't have a mortgage. I didn't have anchors in my life that ordinarily people do, working a job, or the financial pressures. I just had university. So I knew that this was an opportunity where I can really excel. Part of the reason I went to Spain to do my degree in Madrid as opposed to doing it in the UK was I had an offer from Plymouth. Now, you've probably never heard of Plymouth, and the reason that is, it's a tiny town, and I knew if I'm in a dental degree for 5 years, what am I going to achieve apart from my degree? Absolutely nothing in Plymouth. In Spain, I had an opportunity to go and learn a new language, go to another country, and I was at an international university, so I had friends from all over the world. From Canada, I had friends, US, Australia, all over Europe, Italians, Germans, French, and it's that multicultural environment where not only am I brushing shoulders, it was a private university. My father had helped me to go to a private university, thankfully, so I did have I know my blessings, and I know the head starts I had in life. I do believe we all have luck. We are all given luck in life. It's just what you do with your luck. You can optimize your luck. For example, if you're just watching this video, you have access to internet, you're probably born in a Western country, you're already lucky. But a lot of people don't make it out with that same opportunity. So my understanding is I've always been blessed in life. My father is a doctor. I've been given a good upbringing. And my father always focused on education. He would always give me, on top of school and all of that, he would always give me private tutoring. On the weekends, I used to hate it at the time, but I appreciate it now. My dad would set me extra homework. I'd have to go and do tuition. They would set homework. So I was always studying. And anyway, tangent aside, when I was at university, I was focusing on my education, yes, but because I was in a private university, I had an opportunity to meet people that are from wealthy families, because their kids were sent to this private university. Now, I was not from a wealthy family. I'm middle class. And in fact, my mother is a housewife. She's helping around the house. So my only family income was my dad. And my dad, of course, has a good income as a doctor, as a radiologist. But there was 4 boys and only one income in the house. And my dad believed in education so much that he would put basically all of his money into our education, into me and my 3 brothers. So we didn't really do family holidays. We didn't have a fancy house. We didn't have a fancy car. We've had the same car for like 15 years. My dad would always wear the same clothes. I wasn't given pocket money. I wasn't given anything. So education was everything. So when I know that I had this opportunity to go to a private university and get a dental degree, I know I wanted to achieve more from that opportunity. Just like I had in my whole life, I knew that opportunity and luck is given to you. Yes, luck is given to you, but you can maximize it. So I knew that for my degree, I wanted to achieve a lot more. And for me, that became opportunity to meet people, network, go and meet people in Madrid, learn a new language, and more importantly, build a business or build a skill set. And that was my real goal. And I tried a lot of things where I did courses, and I learned about drop shipping. And because I was in dental school, I thought my $1 million business idea would be drop shipping tooth whitening kits. I called it Pearly Dent. The website maybe is still around. Um, and I did Amazon. I did a lot of sales. I did a lot of courses on personal development, and I was just trying my hands at everything. And then eventually I did come across trading, and I did find a bit more of an inclination for that. I did enjoy it more. And for me, it was like solving a puzzle. And I knew that I was losing money, and luckily I was in a position where prop firms didn't exist, and I didn't have savings, so I couldn't put 10K into a broker. So I was just going with demo accounts, or maybe a little bit of rent money when I was getting a little bit more competent, which again isn't the best thing to do. But I was in an isolated environment, in the complete sense of the word, where I was in isolation from. I didn't have financial responsibilities or burdens. I didn't have kids. I didn't have a brokerage where I can put large money into and blow that account. So I was just in a simulated environment the whole time, where my life was taken care of. My trading was not going to be detrimental if I blew money. So I'm just in a position where I was optimized to learn, because I had time, because my degree was taking care of everything else. In terms of financially, I was covered. My degree was where my goal was supposed to be, but the rest of the hours of the week I had for trading. And I didn't have financial burdens of having to pay for something. I didn't have to make trading work right there and then, because financially I was covered, and I didn't have to blow money in trading accounts, which most people do, and prop firms didn't exist, so I wasn't wasting money in challenges either. So that was a beautiful storm for me, where I just could learn in isolation and just keep building the skill set. And for me, it was literally like a puzzle, where I was just obsessed. And my housemates at the time, they would be like, what the hell are you doing? You're always in your room. And I got like a big monitor, because that's what I saw traders do. And I was just obsessed, long hours, long days, truly, not like just people say on the internet. And I was just going at it, and I was going all over the internet, scraping for courses, scraping Telegram groups, scraping YouTube video, everything I could find I was consuming. And my route was Ichimoku Cloud. I went deep into retail, Elliott wave theory. I went really deep into, obviously, then trend lines, Fibonacci, all these things. Harmonics I went quite deep into as well. And I was just a sponge. Now, I've made a video recently where I'm going to talk about what I would do if I started all over again. And for me, it was like, scrap all of that. It was a waste of time to an extent, where I shouldn't have wasted all those years trying to learn strategies which are built on probabilistic things, or correlations versus causations, which is true drivers of the market. The example I can give is, let's say on right now it's good weather. Let's say ice cream sales have gone up because people are going to the beach, which is just down there. People are going to the beach and they're buying more ice cream. But at the same time, people are doing water sports, jet skiing on boats and all these things. And therefore, incidents of drowning maybe increase. So you would say, okay, well, as ice cream sales go up, drowning incidents go up, but they are not linked. People buying ice cream doesn't cause people to drown. So that's a correlation, not a causation. So the market is the same. Whereas when I was learning Elliott wave theory, that's not causing the market to reverse. Market is not moving because of Elliott wave theory. Whereas Elliott wave theory is showing me the correlations of that. So is trend lines, so is Fibonacci. These are probabilistic things as opposed to true market drivers. So that's where I would put my attention. And when I started to really do that, I started to look into displacement, liquidity, inducements, daily cycle, market structure in depth, daily cycle variance, I've just said, lower time frame confirmations, and deeply understanding real primary drivers of the market. That's when things really started to click for me. And yeah, I've never had a job. I've been trading full time since I graduated. That's all I've been doing. And I'm in a good position, thankfully. I'm living, in Dubai with my boys. We've had a penthouse. We've got this beautiful apartment. I've got what else do I need to say? I don't know. I'm just trying to qualify myself so you know why to listen to me. I've got more than 6 figures in watches. Let me show you what I have actually. Well, this is what I have right next to me for now. But you can see I have a code. This was actually my graduation piece. This is what I got for myself, which is like 48,000 euros. And I got this for my graduation day. It's a rose gold chronograph with a skeleton back. This is a code. This is a white gold code as well. I put a fun blue strap in this. I have also this, which is a 50th anniversary rose gold royal oak. You can see in the back it has the emblem, 50th anniversary. And actually, I have some stuff behind me. But anyway, point being, I've done well financially. I've got a 7-figure crypto portfolio, even though crypto is down right now. Watches I love to invest in, and I live a good life out here in Dubai, and I don't have a job, I don't have any other commitments, so all I do is trade and network and go out and meet people. And Dubai is a big city, yes, but it's not as big as you think. And already just 2 years here, I've built so many strong connections, hosted so many things, hosted dinners, hosted events, hosted boats, to just really put myself on the scene. And that's where bigger opportunities come. I have a couple of businesses with Wiley and Alex as well. That's just what I want to do. I'm conquering. I'm in a stage of my life where I'm conquering, and trading is my fallback. So trading is no longer like my main vehicle, where I know that trading can get you to 7 figures, but to 8 and 9 figures, it's not so easy, or not my primary objective, because I've started to realize there's beauty in learning and scaling and building businesses, learning entrepreneurship. I just feel like it's more tangible, and trading will always be a facet for me. So to go from 0 to 6 figures, if I did it all again, I wouldn't pick trading, to be honest. Even though there's prop firms around, I'd pick something more stable, and I'd probably pick sales or B2B services, where I could really get 2-3 clients that can pay me $2 or $3K a month, and I'll do complete fulfillment done for you of their email marketing to generate revenue for that business, or do Facebook ads or YouTube ads for them, which is not a huge learning curve, or just something as sales based on commissions. Sales is an art that I love and I enjoy, and I think everybody should be good at it, because in any environment you are selling yourself, you are influencing people, you are sharing your perspective. And sales done right is not tricking them. Sales done right is showing them exactly what they need to see that maybe they are not seeing right now. So if I can show someone that this product or this service that they're interested in will really help them achieve their goals, and there's barriers in their way that are making them think it's not best for them, if I can show them why it is best for them and make them make the best decision for themselves, which is buy this product, and I get a commission for that, and I understand deeply their problem, what exactly they're looking for, I understand tonality, I understand how to really relate to them and build rapport. All of these things is sales, and you can use that in any area of life. For example, if I'm working a job and I want to get a pay rise, I'm selling myself. If I'm out in a networking environment and somebody doesn't know who I am, they don't know what I do, they don't know my social media, they're just meeting me, I need to put my best foot forward and show them why I am a man of status, why I'm a man of credibility, why I'm a man that has achieved things in their life that they should invest their time in a conversation with me. That's sales. But anyway, I digress. I was actually going to do a trade case study today. But anyway, so my route to 6 figures would be probably doing more B2B sales, B2B service delivery or sales. Once I've got to 6 figures, I would use that cash buffer, and along the way, use it on education. I need stability in my life that I cannot rely on trading, because you don't want all of those emotions on you where you're focusing your whole life around trading, so that you need to pay your bills, you need to pay your rent and mortgage and everything through trading, because you're going to be in such a place of desperation. You're going to trade recklessly, and you're not going to focus on the skill sets. People think that you start trading on day one, start learning on day one, and start growing an account on day one. It's ridiculous. I didn't go to dental school, and in my first year, 2 year or it took 3 years of labs and theory before I could go to a patient and go to clinics and actually treat people. 3 years. So I had to learn in isolation, learn theory, learn on plastic teeth and everything before I could go and treat a patient. So the fallacy in traders is that I can open a trading account the day I start learning and expect to make profit from day one. Absurd. So like I was in an isolated bubble in my trading career in the first few years, because I was a university student, financially everything was taken care of, and I had time to focus on the skill set, and I didn't have the means financially to pay for prop firms because they didn't exist, and I couldn't put money into a brokerage account. So I was focused on just learning and building a skill set. That's what I'd recommend. Focus on building the skill set and have something that can generate you cash flow, like sales, like B2B business, that is not a complete time void. That is not a huge learning curve, but that can pay you well. To get to 10K a month is super achievable. That gives you financial relief, so you can focus on the skill set. Then you can start to balance the two, where you maybe take you take less hours per month on your business or on sales to focus more on trading, and eventually tip the scale, so you completely siphon that off and you focus only on trading. And that's when you become a full-time trader, and there's obviously routes and things you need to do along the way to make sure you do that exit point correctly. But anyway, to get to 7 figures, trading is the best, and multiple 7 figures, trading is definitely the best, especially now that you have prop firms and that route exists. Once you have the skill set, which is probably 2 or 3 years, in my opinion, you got to spend 2 or 3 years in isolation, focusing only on the skill set and building a track record, understanding data, understanding performance, understanding trade models, trade variation types, lower time frame models, good concepts, primary drivers, all of these things. Then you eventually scale into prop firms and then your own capital and scale to 7 figures and beyond. And that's where you can have a substantial career in trading and living. But you'll realize especially the way I'm trading, for example, I have my London window, New York window. I have 2 hours of trading a day that I'm allowed to execute. I do give myself a 30-minute buffer, plus, minus 15 minutes, plus 15 minutes on my London window, and plus and minus 15 minutes on my New York window. So it does come out to about 3 hours a day. But I'm not doing like marathon backtesting sessions anymore. I'm spending time on my journal and my performance and seeing where I'm going wrong, where's my bottlenecks. But I'm no longer backtesting because I'm up to date with the markets every single day. So I don't need to go on Monday and do a watch list and do a top-down analysis and everything, because I know where the market's at. I'm updated every single candle, every single minute of the day. I'm more or less watching. And I'm updated every single day of the week. And therefore, I'm only trading in EU and GU. So I have my London window, New York window, 2 windows per day. 2 pairs, so I have up to 4 opportunities a day. And you guys know my win rate is, I keep it at 50% intentionally. You know my partial systems of my risk reward. My risk reward will be 1 to 3 risk reward, 50%, 1 to 10 risk reward, full volume. So I know that a partial win for me is 1.5 R, a full win for me is 6.5 R, and a loss for me is obviously minus 1 R. So I know my win rate, I know my profit profile, I know my risk management is always fixed. And my trade frequency, I like to keep it at 2 to 10 trades per week. It's quite aggressive, but I'm lowering my win rate so that I can have an increased trade frequency, because I can have my win rate at 80%, but I might trade 1 trade a week, 2 trades, 3 trades a month. I want to lower my win rate intentionally so that I can increase on purpose my trade frequency, because in the end I want to maximize my risk reward profile through volume. And my goal now is session volatility. So as you'll see, if you follow me on Twitter, for example, and I'll show you a case study today, my goal is to maximize my my goal is to maximize my session volatility. I don't care about knowing where the rest of the week is going to go or the rest of the month. I'm not a swing trader. I don't even consider myself a full intraday trader anymore, because if you have an impulse and a retracement and an impulse and your profit taking is subjective, it is so much randomness, there's so much degree of discretion in there, which means emotion in there. I'd rather know that I know my average stop loss is 3 to 7 pips. My average GU volatility in a London session is about 30 pips in a London session with volume. So I know that I can get a 1 to 10 in a London session on a good day. My stop loss being 3 or 4 pips. London session moving 30 pips, I can get a 1 to 10 in just a London open 1 hour, 2 hour window. And I don't have to usually deal with retracements and emotions, because usually if price is taking Asia high liquidity, a smart money trap tapped into supply and shoots for Asia low during a London session, in the space of 2 hours, I can get that full impulse. That's gain liquidity, it's induced things on the left. So it's trading with intention, and after an inducement, that follow through is usually aggressive and strong. So usually I'll go directly to my TP without retracements, and I can be done for the day and wait for my New York window, or just done for, and I don't need to know where price is going for the rest of the day or the rest of the week or the rest of the month. And I think that's a correct way to be trading. So that's just a little update about me and how I've been looking at the markets. And that's been the case for, let's say, the last 3 years. And if you've been following me on Instagram, you'll see my daily case studies for the last 3 years. Or if you go in the highlight section on the WWA page, you'll see all of my positions, most of them. You've seen the YouTube videos where I break down my track record over like 400 trades. And that's kind of the realm I'm in. And on Twitter lately, for the last month, I've just been giving all of my positions. Most of them are signals ahead of time. Some of them just updates of the day. And actually, I've given 15 signals in the last month. Not a single one has been a stop loss. That's just coincidence. I'm not 100% win rate. I have 50% win rate. I've just had a good streak on Twitter. 15 signals, all of them either hitting TP2, which is that 1 to 10, or TP1, 1.5 R, so meaning 1 to 3 risk reward, or break-evens. I've had quite a few break-evens, but I haven't had any losses. So I want to today cover a trade that I gave and break it down and go into detail of that. So the sun is going down, so I'll try and be quick. But essentially, this trade is what I was looking at. And I basically said on Twitter that this is an entry I just took 15 seconds ago. You can check the timestamps. It's 12:49. And who could tell me why I took this trade? So it's seemingly a buy limit or buy entry with a stop loss right there. It looks like I'm catching a falling knife. And it can seem quite aggressive and random. So I need to go into that. And then I go over to this and say, not every setup is A+ setup. If I'm not in drawdown on my account, I can take B+ setup. So basically, if I'm starting a new challenge, a prop firm challenge, I don't want to enter with drawdown. I want to take an A+ setup to start off strong. Or if I'm starting a week on a new account, let's say, but let's say you're up 30% for the quarter, you don't need to be trading super conservative. You can take B plus setups and trade frequency high, risk reward profile high, and win rate slightly lower. That's the way I like to keep my dynamics. But anyway, this trade just 10 minutes later or so is you can check the timestamps for everything. It's hitting my first TP, 1 to 3 risk reward. I take 50% volume, so this is at a 1 to 5 risk reward. And some of you trade with too much. So actually, yeah, if you look at the comments on the initial post, people were going crazy. They were like, gambling addiction. I know this guy was kidding. I see him around on Twitter. Like, he's a good guy. But people were just saying, price is already liquidated. You guys went. There was just people saying that you're wrong. Maybe the hate people will just delete their stuff when they see I win. But yeah, there was people who were just basically saying you're wrong. You're gonna get smoked. This is not correct. Whatever. Anyway. So yeah, I took that trade, and not too long later, I'm in profit 1 to 5 risk reward, and I speak about it, where that trade does go to remaining volume at 1 to 9 float. So it does go quite high, just like within 5, 10, 15, 20, 25, like within an hour, I'm 1 to 9 risk reward up, playing that session volatility, and that is the reason why. So this is not a clear reason why I could enter that trade, because there's no lower time frame model, there's no internal BOS, there's no two-leg protocol, there's no entry models that I use. So why did I enter on that position? And it's something I've been speaking about a lot on Twitter, and it's the divergence thing. I've come to find out it's an ICT thing, which I didn't know. It's called SMT divergence. For me, it's just something I noticed and I've been using for a while, which is, this is what the trade I was taking. So if I go on to, let's say, an M15, I can see where I'm at in price action. Well, let's actually go to H4. I don't remember fully because it was a couple of days ago, but I just want to see where I'm at. I'm at no man's land, okay? I'm in the middle of nowhere. Price is done in accumulation, so we usually do test top of range, but not too much. It's in a bullish market, and I'm in the middle of no man's land. So I go down to my M1, and there's nothing really to see from a higher time frame. So this is complete intra-session trading. And all I'm really doing is playing liquidity and session volatility, and going from liquidity pool to liquidity pool. So over here, I can basically see that price has come in and it's telling everyone market is bearish. We've done that for smart money traders. We've given a bearish impulse. We've given them liquidity target over here. So we know that smart money traders and everyone else is bearish. And to be honest, it is. We're seeing, for example, this inducement over here showing us bearish. We're having that inducement over here showing us bearish. So we are in a bearish market. Now, when I grab this liquidity, these lows during my London window where I usually expect intent, that's where I have my interest involved. So I can see that not only do we have these lows as a liquidity pool, we have also this over here. And this for me is telling me that smart money traders were trading that FU candle, or whatever you call it these days, smart money candle. Smart money traders entering there, smart money traders getting a reaction over here because they're basing on these lows, run of liquidity, push out, coming back to buy over here in a London window. Smart money traders are interested there. Smart money traders get a small reaction and then they get smoked. So I know that that is a smart money trap right here. So I have a smart money trap here, I have a trendline liquidity induced, and I have these lows. So I know that I have a nice run of liquidity over here, and that's the low of the market. That could be my inducement of the day during a London session, which I love. But I can't catch a falling knife. I need confirmations on why I should enter that trade. So therefore I look at lower time frame confirmations, and I'd wait for 2 legs, for example. I'd wait for a break of structure over here. I'd wait for confirmation. How did I enter this position with no confirmation at all? Okay. Seemingly, and it's because of the trick I use, which is on, let's do it like this. Yeah, so when I look at this in a bit more detail, I can start to see exactly where I am on M1, and this is exactly the confluence I used, and I was updating Twitter as I went along. So this is the same price action moment on GU, and on the left we have EU. So over here we have 8:32 a.m. So you can see on EU, 8:32 a.m. we have made a low in the market that we're having a push out from. 8:32 a.m. So basically that area, we have made a low in the market and we are pushing out from there. So right now EU and GU are mirroring. We're getting that, we're getting that small bullish impulse. Now when we come to this area, which is like 8:45 ish, over here we're getting a mitigation. We found the relevant imbalance. We're getting a mitigation. I think it was based on M5. I don't remember exactly. Let's actually take a look. It wasn't an M5. Let's see what exactly it was. I had to find an imbalance, which is always a criteria for me. Yeah, it was probably an M3. Yeah, I took an M3 zone. But basically, I was watching that EU is coming back to that base in the market. Okay. Where have we ended up? December 6th, yeah. Okay, that's later on in the day. This. So we can start to see that over here we are getting a base in the market, so EU respecting GU. GU is actually inducing at 845, and so we are getting that inducement area. We're getting price doing a manipulation, whereas over here we are getting price respecting. So when I see one is inducing, one is respecting at the same time during my London window, that is a confluence for me that we have met the base in the market, we have met the low. So I take a trade based on that, stop loss at the low with a small buffer, and for me this was a 2.5 pip stop loss, quite sharp, and this was actually a market execution because I needed to see this diversion. Or whatever you call it from an ICT perspective. For me, it was just I'm seeing a manipulation over here and a mitigation over here. This is telling me we are getting an inducement, whereas over here we're respecting. This manipulation for me indicates that this is a real move. Otherwise, we would be getting a low on both. And then because I've aligned it with smart money trap, trendline liquidity, and equal lows met during a London window after taking Asia low liquidity, my daily cycle will tell me I need to come back to this smart money zone at a minimum, and then wait for the reaction over here and wait for that to be taken out for Asia high liquidity, because that's, I know, a daily cycle variance. So that for me, I knew that my trade target can be at least a 1 to 10 if I go to the full extreme. So I know that it meets my trade minimum requirements. And I know my 1 to 3 I can get that quite quickly, because the 1 to 3 will be just here. And I know that, for example, if I'm wrong in my analysis, I know that this highs and that inducement over here that led to that low price, if it comes back to that supply, let's say, and continues lower, I can at least get my 1 to 3 and partial out. I'll be break even for sure, and I can even grab a partial. So that justified for me that trade. Let's go back to normal. And actually on Twitter, let's update that. So that's actually exactly what I've done. I've taken the position over here with the divergence thing. I don't even have a name for it. And then I've seen the strong reaction. And then as I'm coming to that smart money zone I've mentioned, that's where I'm looking to hedge. That's where I'm looking to sell. I've taken a partial already, and I've secured 50% of the volume at 1 to 3, 1.5 our gain. Remaining volume, I'm going to hedge now. And that's kind of what I updated the day on. So let's actually go and see how the rest of the day updated. So over here now, buy position was given live. I literally, as I executed it, I gave the position, so you could actually see in the post live in real time. I'm not even broke even yet, so I have my buy entry, I have the stop loss. Anybody can enter with me if you just have your notifications on. And then I come on later in the day, I give an update as I've come higher, and I'm saying, look, I'm entering on this sell position. Buy position given live, 1 to 3 risk reward, 50% volume, 1.5 hour gain, 50% volume running 1 to 9 risk reward at the moment. Sell hedge position taken now, given live in real time. You can see the timestamp in the picture. Well, it's actually just cut off, but you can actually see it right there, 2:28 Dubai time. You can correlate that with the post timing. It's all given live, it's all tracked. And I'm saying using profit bank today, I can now take this hedge because I've already gained something, and this is my sell, this is my stop loss, and let's explain why I'm taking that position. And then I can update on what I commentated during the day on Twitter. So I've seen now that this was a smart money zone. Smart money traders were interested there, and I saw that therefore that became an inducement. People caught on the wrong side of the market, because people are going to be saying, we've had that run of liquidity, we've had this smart money equal highs, we've had a bearish break of structure. So I know that smart money traders are looking to sell from here, especially because we are in the middle of nowhere on a higher time frame. People are obviously looking bearish because they've seen smart money zone, and bearish reaction. It's logical to have a bearish reaction. So market is now fooling them in, okay, and then we induce them out, we get a run of liquidity for them, and then we start to get early sellers in. We are getting this order flow with no intent. So I see this liquidity building up. For me, it's not a valid entry because I have not come to an area of interest. When I see this inducement out and I tap into that supply zone on M5, now I'm starting to get interested, but I can't just jump in yet. So I have to wait for a break of structure. Now I'm interested because I've had price come lower, made a lower low, after we've had smart money trap inducement, build up of liquidity, inducement and mitigation of supply. Over here, that was an inducement area too. I'm seeing a reaction bearish now. I start to come up, and then what do? This is where the details really count. I start to see even more closely, I start to see a buildup of liquidity over here, an inducement into my supply over there, the area that led to that BOS, price comes back and we form this liquidity channel over here, perfect. And right here, I can start to validate an entry because I've seen a reaction, and actually you can even see price does an inducement, mitigation of the left, closing off that imbalance, okay, and then it gives an internal BOS over here. It gives a reaction, internal BOS, mitigation of that imbalance, and then price pushes lower, build up inducement. So you can actually start to see there is so much beauty in this, and there's so much detail if only you look, watch, and learn how the market moves. Let me show you more clearly. Read the intentions and everything will be clear. It's so clean. I love it, man. We have build up, inducement, break of structure, build up, early traders reaction. We get that fake breakout, smart money trap taken out for them. We do a inducement again that leads to the BOS, another imbalance left, price comes in there, gives a small consolidation, induces into that, closes that imbalance. So inducement 1, inducement 2, inducement 3. After I've had that confirmation, I've seen break of structure, I've seen liquidity target over here, I'm seeing that internal BOS, for example. It's all confirmations for me that I'm coming for this liquidity pool right here, and then that last inducement over here again covers it for me that this is a good trade to be taking. So on Twitter I've been talking about it, where I'm saying I'm taking that sell based on the things I'm seeing, and the low that I want to take, I actually enter on this one. I see that break of structure, tapping into supply, break of structure, price coming back, I'm going for that imbalance, and then I take a entry. Then when price starts to retrace here, people are panicking. They're like, okay, you're going to hit stop loss, whatever. So that's when I actually say it, like, look, I've put my reputation on the line, I'm taking trades live, and this, that, and the other. And then I say, don't panic, all is under control. In the original entry, which I took here, price went into profit a bit and it's retracing, people are panicking. I'm saying, look, all is under control, just read the intentions and all will be clear. Original entry is still valid. That's the entry, initial entry, and that's the right after the reaction. And then a little bit after that is where people started to panic when they're seeing the retracement. They're like, okay, price is coming back up. Wakari, you're wrong, whatever. I said, don't panic. Everything is fine. Everything is under control. So then let's take a look at some more updates of that position. So now I say 1 to 3 risk reward secured. So as price comes back down now, grabs all of that liquidity, bearish, now we're seeing all of that bearish momentum, bearish reaction. 1 to 3 risk reward, I secure a partial as always. So I secured 1 to 3 risk reward, 1.5 hour on the buy signal that I gave publicly live ahead of time, and the sell signal publicly live ahead of time that I gave. So I'm 3% up, assuming 1% risk on signals for the day. So I bought up, took 1.3, I took 1 to 3 risk reward partial, sell down 1 to 3 risk reward, took a partial, and then I continue on for the day. So let's see where we went next. TP on the sell signal here. Yeah, so I'm just updating that. Sell signal 1.5 hour secured, buy signal 1.5 hour secured, 3% today. So that's just an update of that. Nothing else really. It's crazy how much views I'm getting on these, just because people are seeing I'm not doing bullshit. I'm giving trades ahead of time live. I have like 7k followers. I'm getting 40k views and 100k views on some. Like posts are really doing well because I'm showing live trading that no one really does. 23k views on it's just cool to see how much growth we're getting on here. Okay, then let's talk about the next position. So now when we come lower and we see that, okay, this is a smart money trap. Why? Because of the efficiency of the pullback. You shouldn't be buying in a bearish market, which it is, when we're seeing intention, bearish intention, bearish intention, bearish intention, bearish intention. You shouldn't be buying without confirmation on this inducement area, which you could if you frame it correctly. If you have a break of structure, you don't come to supply. But the moment you come to supply, bearish impulse, complex pullback, bearish impulse is expected, a new low is expected. So this is a clear smart money trap, which again adds something for me, because I see clear smart money trap, and we make a lower low, grab this liquidity, and now I want to see why I've put a red at 12.26. What do I have going on at 12.26? Okay, so I'm taking entry here. No, there was no divergence really here. All I can really say is that price here is clearly doing an inducement and tapping into that demand level over here. So when I'm seeing the same thing, I'm seeing that this whole manipulation that is happening here, in this not happening into demand or anything, over here is happening into demand. So I can start to see that move, that is an inducement of a POI, okay? Does given a strong reaction out and a bullish break of structure over here. That same move over here is just a low in the market, but I can see it's giving a strong push out. So I'm seeing that here it's not led to a break of structure, but here it has. It's led to a break of structure. So when I come back, here it's not coming back to the POI that I want to trade, but here I can go off the M5 zone, which I did. So this is another trade that I took. Internal BOS over here and correlation confirmation. Okay, so that's why I took that buy position. Again, I'm trading with the house's money. It's not my money. And the key thing being New York window is fast approaching. So I take that internal BOS after taking a liquidity pool, and I've taken partial. So it's just a hedge position. And then that does play very nicely to go on and take exactly what I wanted, which was take this smart money zone. This is a clear smart money trap because it's at Asia high. So then we go ahead and take Asia high liquidity. We take that smart money early. This is a smart money trap. So I've traded the smart money trap knowing it is, and then I buy to then take that liquidity. And smart money traders are getting in here. They're looking at that reaction and saying, okay, this is a smart money zone. I got in too early. Let me enter here again. Smart money traders enticed. Smart money traders induced and taken out. And then this becomes very clear because then we have the real inducement. Takes smart money trap zone. Takes Asia high liquidity. Let's actually mark it out because it is now a smart money trap. We take that Asia high liquidity, smart money trap liquidity, clear inducement in our gray box, which is my key time window. And then when I see that, so this again is re-emphasizing the smart money trap. Perfect. So this for me is a very clear inducement. And then what do I see? Price engineering liquidity, doing a minor inducement right here to confirm the intent, and then a break of structure. So now that I've seen that was the minor inducement candle, that's the zone I'm interested in. I've seen a break of structure now, so I put an entry based on this, and then I see prices holding that liquidity. It does one last inducement, okay, and then price is ready to go. And so you can just read the intentions again and again. First inducement right here, second inducement right here, third inducement right here with break of structure over here, break of structure, liquidity engineered, it's the same shit all the time. And that was the last position of the day. And then that should have gone on to then close off the day wonderfully. And that should be a full trade. So again, 1 to 3 risk reward, 50% banked. 1 to 3 risk reward, 50% banked. Over here, full volume, so 6.5 are banked. And this one, full volume, 6.5 are banked as Asia played. And the whole shebang, the whole thing given and broken down and explained, everything explained and shown on Twitter. So yeah, if you're not following me there, you're missing out. And this is a full breakdown case study thing I did. You know, some days in the market, where was I at? I was on the Palm. Ahead of time, I was on the Palm on the Raffles Hotel, and I'm breaking down everything. So yeah, go ahead and watch this. Maybe it's a little bit more detailed there because it was fresh in my mind. But yeah, very cool to see. Very nice day in trading. Every day is not like this, which is why I said not every day is like this, but today was a perfect day. So it's very cool to see price action like that. And remember, I've showed all the MT4 screenshots, I've given signals, I'm doing everything ahead of time, and that's just not today. It's like every day. I'm doing it every single day, giving signals and explaining them and breaking it down, giving signals, breaking it down every single day, updating them. So if you're not following me there, you're literally missing out on free game. Look, here's another one. Sell signal, here's a sell limit ahead of time, and then that's playing out. It's the same thing, man. So yeah, do go ahead and check me out over there, and I'll do more of these. If you like these more candid videos where I'm not doing it for the algorithm, I'm not doing a fancy thumbnail and title, I'm just chatting away, speaking what comes to mind and breaking down charts, hanging out. If you like this style, do let me know. Oh yeah, and if you made it to the end, I want you to do something. So there'll be somewhere linked. I don't want to work with a lot of people, to be honest. I've done WWA for with the boys 4 years or something, 3 years, I forgot. And we've helped a lot of people, but I don't enjoy mentoring anymore in the traditional sense of having a Discord with 500 people in it and massive group chat and chaos and people blaming, scapegoating, people not doing the work. For example, we used to have weekly homework tasks, and 5% of the community would take part. And that for me is such a spit in the face. I'm like, how are you then asking for my help and being on board a mentorship and looking for guidance, and I'm telling you what to do, I'm telling you how to do, I'm telling you participate in the homework, and people are just lazy. So I just forget all of that. I don't want to work with lazy people. So I'm still going to help people out, but I want to focus no longer on education and just a course. I like helping people with application, going through price action like this every single day, guiding you through the process, going through your trades, going through your journal, going through your account, going through your broker statements, and figuring shit out together, really. And that means I will only work with a few people that are really interested in taking it seriously and will respect my time and do the proper work. So if that sounds like you, there'll be a link somewhere that you can book in a call to speak to my team. You'll have a growth planning session with my team where they'll just basically find out if you're a correct fit, what exactly you're looking to achieve, how much time you can devote, if you're a good character fit for someone that I want to work with. And if you go through the application process and you are selected, then yeah, you can work with me. So I'm going to take limited seats. I'm only going to work with the best people that are truly committed, because I'd rather help 20 people get funded and make full-time a career out of it than help 1,000 people and 90% of them are lazy and whatever. It's just not the way to do it. So I respect my time. I value the thing I can bring to the table. I value my skill set. And I just want to work with people that do truly appreciate it too. So if you're interested in that, find the link and book in a call, and maybe I'll see you on a more personal level in the future. Take care, guys.